Hey everyone, Couch Investor back to another video for you today, and in today's video let's talk about a pretty under the radar company right now that has been holding up quite well in recent months. That company is called Pinterest. I've covered Pinterest a lot on this channel, basically each and every earnings for the last, I believe, 2.5 years or so. The stock went from the first time we covered it on the channel from around $18 all the way to close to $80, and then it went all the way back down to around $18, and now we're at $26 or so. Not long from today, by the time we're watching this video, we're going to have earnings, so we're going to cover that on this channel as well. But in this video, I just want to remind everyone what Pinterest, what the financials actually are, why it's such a strong company right now, and why most of the market is actually pretty bullish on the company in 2023. So first up, as always, let's have a quick look at the current state of the company. So with regards to revenue in the last 12 months, it sits at $2.77 billion. Obviously, growth there has been pretty minimal lately. Let's try and see if 2023 might be another story. They did say that in 2023, we should expect some margin expansion. We're going to talk a bit more about that in just a bit. With regards to free cash flow, it is still free cash flow positive. Of course, it has come down a little bit, but again, 2023 should be a much better year. With returns on equity, we're still positive, but we are closer to the 0 point. We're now at 2%. We were, I believe, a bit closer to 15-16% back in the highs of the pandemic. Then with regards to gross profit margin, that has also come down as well a little bit. We're now at 77.10% in the last 12 months. With regards to EBITDA, this as well is positive, but it has come down in recent quarters. Now with regards to valuation, in this case, price to sales for the next 12 months, we're at 5.9 times, so not that cheap. With regards to a forward PE, 42.2 times. So again, not cheap at all. But as management has said, 2022, 2021 has been years of investment in the business. 2023, we should see some results, which is exactly what they said during last earnings call. We believe the investments we made this year will enable us to continue innovating to enhance both the user experience and our advertising platform. As we exit 2022, we're focused on maximizing the return from these investments. We are still committed to meaningful margin expansion in 2023. So I'll be very, very excited to hear more about this in the coming quarter. Of course, I would also love to hear more about the shopping experience on the platform, the pilot program with Shopify, how all the engagement, how all the dollars, let's say, stream through that platform now that they are semi-launching it after years of investment and product testing. So quite an exciting year in 2023, but a year where I would like to see results. And now before I go and talk about an upgrade from an analyst at Piper Sandler, if you enjoy this type of videos, leave it a thumbs up and subscribe if you have not. I would really, really appreciate that. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor and make sure to check out all the other links in the pinned comment, some of which might actually save you some money. So, an analyst at Piper Sandler upgraded Pinterest to overweight from neutral with a price target of $30, up from $25. Yes, this was last month, so back in December. The analyst sees multiple tailwinds for the company into 2023 after his advertising buyer survey pointed to an improved ad product and rising market. I don't know why there's 2 times rising here, but okay. The data points to better monthly active users trends for Pinterest, says the analyst, who also sees a path to margin expansion ahead. We like the new leadership, investor activism, and we see a buyback coming. Now, with regards to the buybacks, during the last earnings call, they did mention this. So lastly, we have a strong balance sheet with roughly $2.7 billion in cash and cash equivalents, and our business continues to generate strong free cash flow. Our primary use of capital is to invest in the business to drive continued growth. In addition, Todd and I continue to evaluate our broader capital allocation strategy, including a plan to manage dilution from stock-based compensation. Maybe, and this is just speculation, maybe this might be a buyback. So not only do I expect margin expansion in 2023, more positive results with regards to the shopping experience on the platform, but yes, I'm also expecting, especially if the company is still generating that much cash, I am expecting an announcement of a buyback. These are just my thoughts. Of course, I could be wrong. Now, with regards to the business itself, how was it in Q3 and what can we maybe expect in the next quarter? Because remember, 2022, especially at the start, was pretty bad for the company. Growth was slowing down, monthly active users were going down. So technically speaking, on a year-over-year comparison, 2023 should be an easy year, let's say, especially if you look at those year-over-year growth rates, should reaccelerate because during the pandemic, the company obviously grew a lot. Coming out of the pandemic, we saw that growth slow down. We saw MAUs go down as well. So 2023, we should be seeing the opposite effect. We've talked about that with PayPal as well. The same could be said about Pinterest. So with regards to revenue, it grew 8% year over year. Of course, Q4 is always the stronger quarter. Now, consensus sees it coming at $886 million, so around 4.5% growth there. Now, if you want to compare this quarter to, let's say, 2021, it's a bit more complicated because right now they do split it in US and Canada, Europe and the rest of the world. Before it was just US and international. Now, if we scroll down, we go to monthly active users. As you can see, Q4 2021, it was basically the lowest point. So on a year-over-year comparison, let's say we stay flat at 445, that would mean a growth of around 3.5% if we don't grow at all. If we continue to grow as we did from Q2 to Q3, then maybe that year-over-year comparison will look even better. But as you can see, Q4 was the lowest point, then Q1 were 433, Q2 stopped the bleeding, we're still at 433, then Q3 that increased. Let's see if we can increase again in Q4. That would actually be a very good sign. And then of course, when it comes to ARPU, so average revenue per user, especially now in the current macroeconomic environment, we know that advertising is slowing down, etc. So advertisers are extremely picky as to where their advertising dollars are going to. We know that the return on investment for people that advertise on Pinterest is extremely good because of the use of the platform, because of the users that are on the platform. Now, again, here comparing with what we had a year and a half ago is more difficult because again, this is US and Canada, Europe and rest of the world. Of course, rest of the world is barely monetized. Europe is beginning to be monetized a little bit, but US and Canada is still the most lucrative market for the company. Now, when it comes to cost of revenue, of course, it has increased each and every quarter in the last year or so. That's why we should expect 2023 margin expansion because they did say that all those investments should help the business. And then what could we see as well? Adjusted EBITDA go back to a more growth mode. And of course, the same could be said with the margins there. And so those are the things that I expect to happen in 2023. Of course, we will get more information during the next earnings call. Also during earnings, there will not be a shareholder letter. They will talk about all of it during the call. Now, before I conclude this video, quick look at the graph here. Like I said, the stock itself was pretty strong if you compare it to the other players in the market. Now, here as well, we see that big green candle here go over the 200-day moving average. When you look at the MACD, very, very bullish. We're now over 0 as well. When it comes to the RSI, we're at 56, close to 57. Of course, if we continue on this way up, because we did break out here, then try and look and be cautious. If it goes over 70, then it becomes a bit oversold. So quick movements in a short period of time are never that good, but keep an eye on what happens in the next coming weeks. And so to conclude, although Pinterest was a forgotten company, probably a forgotten stock as well, of course, there's still those rumors that maybe the stock has been extremely strong because somebody knows something. Maybe it will get acquired. Who knows? We've had these rumors last year. Microsoft, PayPal, when the price of the company was way higher than today. Maybe something might happen. Obviously, I don't think Microsoft will buy Pinterest because they're too busy with Activision and ChatGPT. PayPal, to be honest, the current situation of that company right now also doesn't really make any sense to make such acquisitions. So in my opinion, Pinterest will just stay as a standalone company. I think it can do great. If let's say if I were speculative and I would make a bet, I think Shopify, Pinterest might actually be a good, let's say, merger acquisition. But hey, that's just speculations, of course. Do leave your thoughts down in the comments below. Do you still hold Pinterest? What are your expectations for this year? Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.